Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. The S&P, NASDAQ, Dow all finished a little lower here today on a softer note. Russell, though, did finish and hold into the green. We actually spoke in the Morning Express about the Russell being the one that could be the weaker, and so it hasn't happened yet. But one of the things that stood out to us, too, today is you saw the high in the S&P and some of these indices come in at 8:30 Central Time, right on the opening bell. And compared to last week, we saw strength begin on the opening. So it was where last week buyers stepped in and took the market higher. Now it's a little bit different. We're seeing some strength on the opening that can't go any further. Does that mean we're running into resistance, a little exhaustion? Yeah, it does. We would never step in the way of this NASDAQ and some of the things that it's been able to do. But there are some signs of weakness in some of the other indices, and we began to note that today in the Morning Express. Let's take a look at some of the charts and some of the things that stood out to us here today. First, here is the daily on the S&P. So you can see this a little bit of, it's hitting a headwind here. And that headwind is the 200-day moving average. It's obviously some damage that was built in through here in these breakdowns. Previous highs, retracement levels, everything kind of played out in through here too. So a big area. And yeah, this 200-day moving average again is right around 3,000, very round number. If you move into this is an hourly chart here, and I have the MACD on the bottom. So you can see how the run up from last week, tremendous strength. But once it's stalled, we've seen sort of lower moves, lower peaks in this MACD, and then overall not being able to break out above here. This actually here, a failed crossover, can lead to some additional weakness. We do think the door is open here ultimately, especially if they're finishing on a weaker note. But one of the ways we're playing it is strategically with some puts in the Russell. The Russell here we would feel has a little bit more downside. Slightly higher highs here, the same sort of lower highs in the MACD and exhaustion that's building. We think that the Russell would have more downside on a potential move lower. So we've talked about it in the Morning Express. Give us a call. We can walk you through some of the ways to play it. Let's move into the currencies though. In the euro, we know we've had a very bullish longer-term dollar look, and this is an interesting here. The euro did make a new high. You also in the MACD, we're covering the MACD today. A good look of exhaustion here as this thing lower peaks on higher highs. So it does play into that dollar thesis. And one of the things I want to point out here and give you the dollar chart. This is from our CQG platform. The dollar, although the euro made a new high, the dollar did not make a new low. I thought that was very interesting. Got this outside bullish reversal bar here. This is a 30-minute chart and in tremendous strength. Maybe a little bit of a bull flag here. We are stretching to call it a bull flag, but this strength, it feels like it should follow through a little bit. And again, if you go to this daily in the euro that we pointed out yesterday, and you have this be a little bit of a ceiling that's building. So now the 50-day moving average is support. So we got to see kind of close back and below there tomorrow, end of the week. How does this weekly close finish? And do we get a tail on the week? Now, a couple of our pieces, a couple of my interviews here today alone talking about long dollar over the long term. And so we'll attach those in. We have those on our website. Check those out. But we do feel that coming into the second half of the year, the dollar is going to strengthen. And given everything that's happened, everything that the Fed has thrown at the market, all the printing, you still haven't been able to break the dollar out of this range. Today is encouraging to see it come off support, and so this is near-term encouraging. Can we get some follow-through on a weekly basis? And as I showed you here in the euro chart, does it leave a tail? Same sort of way. Does it leave a tail on the euro on the upside? Does it leave a tail in the euro on the dollar on the downside on the weekly? And then let's run into crude oil. We've had some strong resistance levels overhead. This is really strengthened much more than even the bulls have been able to predict. But you got a previous top here, April 9th. You got a 382 retracement going all the way back to when the Iran stuff was going on in January. So a lot of resistance here. Does it fall back? It's getting. We talked about a lot of demand coming out of China. Can that stay? Obviously, there's other questions too. Do you start seeing some of the shale come back online? That's the question. So rig count numbers tomorrow, something to keep an eye on, but you're not going to see those. If shale does come back online, you're not going to see it quite yet. So it does feel exhausted, but tough one to step in front of. There are some reduced or defined risks ways to play it. Give us a call. We can help you walk through some of the stuff. And let's finish out with the metals. Silver is something we're talking about here all week long. 1850, big area of resistance. And look, a heck of a run. It stalled out here. If you weren't taking anything off the table here, it's just being greedy at that point. But at the same time, at our desk, clients who we know were in silver, we talk to just about every single one of you, telling you that we are reducing and getting out of our silver exposure, looking for this thing to come in. And it does fall in the narrative with gold. June gold expiration. June gold expiration is next week, and with that June gold going off, it's happened many times before where you've seen a commodity contract have a directional move or continue a directional move after the expiration. June gold, it happened last year. As soon as the expiration was over, it was about 1286. It trickled in and down to 1286. Saw some weakness, it broke some support levels, and guess what? June expiration off, market ripped, never looked back. 1500 settled in, and now we're 1750 here, and really hasn't looked back for an entire year, except for that early March fallback after the crude oil price war and that wave of deflation. But other than that, I mean, this market has been basically straight up since that June expiration a year ago, and we expect gold to lift after that. So let's take a look at the gold chart. This is playing right into it. So you had this breakout last week, and gold failing on Sunday night, Monday, coming back in here. So where do you expect it to come in here? Well, look at this, sort of this apex cross here, 1700. Wow. Going into, I mean, it would just be too ironic to see June gold options expiration right at 1700. So I think you need to be prepared to see 1700. We still remain bullish gold long term, intermediate term even, but we are prepared to see 1700, and we want to be buyers into 1700. And let's finish off here with copper, because copper did fall back today. Heck of a move this week in copper. And I'll say first, we did come out last week and put out a low risk options trade in copper. It was about 65 ticks, half a penny on copper, $125, $170 to get exposure in a butterfly spread that expires next week. And it moved out, and the market moved out above it. We were wrong in our timing there, but guess what? This is not out of the it's not out of the potential here to see this thing work, because this right here, next resistance level, this is where was a huge down move had begun in March, the second wave of selling in copper. But this also goes back, previous lows. Look at this, all the way back to 2017, huge level of resistance up just below 250. And we're falling back here right now. And furthermore, you can see here in this volume profile that all the volume in copper, it has basically nothing. I mean, it's obviously a large range here of time, but look at all this. I mean, we spent so much time here, and this is just going to be a tough area. The first time up here, a tough area to get through for copper. So, looking at this chart again, I would not be surprised to see this fall back in here, 234, in somewhere in that range, even down to the 50-day moving average, 230. That's right in the middle of our butterfly with a few sessions to go, so it's not out of the potential to see that come in. And again, taking low risk plays like that, and not over leveraging with them can you just need to hit a couple. You need to hit them every now and then, and they turn out very good. So that's not out. But overall, if you haven't done anything copper yet, take a look at it. This should be on your radar. It should be on your radar to see this price action come back in. Definitely a big down day today. It's tough to chase price action here, but if you can find a limited risk way to play it, and we are here to help, give us a call. Give you some ideas, a way to do things. 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.